happy day. Hope you guys are doing good. So I want to talk to you about compensation as a new agent. Compensation, you need to understand it because if you don't, I promise you it will hurt you. And you do not want to lose money or have a wrong idea of how you get paid in the final expense space. So let's chat. If you write, let's say, a face-to-face or the telespace, a first day full coverage carrier. For example, Prosperity Life, Foresters, Mutual of Omaha, the Cow. Not my favorite, but reach out. I'll give you a heads up on that if you're in the telespace like I am. But let's say, Prosperity, Royal, Move, Foresters, Americo, AmAm. Okay, there's so many, Trinity, the sky's the limit. There's tons of final expense whole life insurance companies out there. But if you're asking health questions to the client, the majority of these carriers will give you what they call a 9-month advance. Okay, so out of 12 months, if you have a 9-month advance, what that means to you is take your annualized premium, okay, and if you're 100% comp, take it and go 0.75. Times it by 0.75, that will tell you what you will get paid immediately. Okay, now if they pay with a credit card, most carriers will pay you what they call as earned. So that is going to be a monthly basis. So if you have, let's say, $1,200, $100 a month of premium, you're going to get paid $100 every month in perpetuity for the first 12 months. Make sense? That's how you get paid. Now, if you have, first day full coverage business and they use checking, they use, let's say, their savings account, a routing number, their checking account number, you're going to get paid a 9-month advance. So it would be a 75% advance on what you wrote. It's basically, okay, they fronted you commission. So understand that. So if the policy goes sideways, just know that that money is going to wash back out to sea because you didn't earn it, okay? If they kept it on the books for 12 months, you earned it. If they don't, it goes back to the insurance company, you write a check, or your new business will absorb the chargeback. This is how it really works, okay? Now, if it stays on the books and you've gotten a 9-month advance, so you get paid 75%. So if it was like $1,000, for example, just for simple math, I'm going to keep it easy on myself as well as you guys. It's not just about me, it's about you. $1,000 AP, and you're at 100% commission, okay? $1,000, you're going to get paid $750 fronted if it's checking business. That's how it works. And then after 9 months, you're going to get paid every additional month until the remainder of that money is in your checking account. Pretty slick. So I always say when you write a lot of as-earned business, talking about credit cards, okay, or Direct Express, depending on your carrier, that is always paid traditionally as earned. So you're building a snowball. So you don't see all the money realized right away. You want to be aware of this because when you are planning, okay, your weeks, when you are planning your marketing expenditures, you need to understand how you get paid and how your checkbook is going to get filled back up because you just spent it on leads. Okay, it's going down like this. You got to make sure you understand how your pay scale works. Understand how every carrier compensates you. You need to be in control of your business or your business is controlling you. We can't let this happen. We don't ever want this to happen. Understand how you're compensated. For example, with there's a company out there called GTL. Okay, that particular carrier, I wrote, a commission that was like $2,000 of commission in a day. It was checking business. It was awesome. That carrier never fronts more than like $600 of compensation. 600. Okay, that's it. And then after that, it's as earned. It's a really good snowball. Takes care of your family extremely well. But if you're brand new, stepping into the final expense space, you'll really want to be able to write more checking business, more savings business, because it's going to inflate your income because you're going to be able to get a 9-month advance, or keep it simple, 75% of your AP, right? If you're 100% comp, pretty good way to go. Now, if you're working for, okay, let's say some IMO or some captive agency, you're not getting 100% comp. Let's face it, okay? You're just not. And on guaranteed issue carriers, let me tell you, you're probably getting paid less. I train and hire agents nationally, okay? I partner with them, give them good compensation, great training, help them succeed in this space. But I've heard so many horror stories of people getting paid 45% comp or less. I've got places that are like, oh, you can make this amount of compensation once you recruit so many people or do all this. It's like so many dumb hoops you got to jump through. That's not necessary in this space. Just isn't. If you need help, reach out, like, subscribe, share. My information is in the description. I'll serve you and help you in any way I can. You want to stay out of the weeds. Okay? There's so many great agents that are so good that get kind of taken off course a little bit because they were drinking some Kool-Aid or, getting into a position where they thought they were okay, and then they started looking at things and going, yeah, I'm not getting 100% comp. This isn't great. So understand, if it's first day full coverage, you should be getting taken care of well. It's important because you're paying for your own leads. You're paying for your own marketing. And the more you invest in yourself, the better off you're going to be, and the better off your clients are going to be, because guess what? You stayed in the insurance arena. The last thing you want to do is get in, dump a whole lot of money into leads, not understand how you're compensated, and then get surprised at the end of the month when you realize that, wow, okay, I'm not getting paid. You want to understand, you guys, chart your course, understand your expenditures, your costs, but understand what you're putting into lead flow. Don't get cheap on leads. It'll hurt you on the backside. But just know how you get paid. It's a very important thing to chart this stuff out. If you earned money, okay, even if it's as earned, chart down what you really made. Yes, it may not get paid all at once, but you still will make that money over the next 12 months. So as long as you can absorb those costs and handle it, building a snowball of wealth is very awesome. It's very lucrative. It is very comforting, okay, when you have this, because you may have $2,000, $3,000 of snowballed money in the next 12 months. It's very nice to be able to wake up every day and know that, wow, I'm getting paid. This is pretty great. Now, it doesn't front you, okay, as deep as a 9-month advance or 75% advance, okay? Same thing. But you are sleeping well knowing that I've got money rolling in. It's not a huge deal, okay? Understand your compensation. Make, okay, a file for every carrier that you sell. Have it separated. Put it in a cheap manila folder. Be organized in the final expense space. Don't have your papers all over the planet, but understand how you get paid. Make sure your IMO or FMO is explaining how you get compensated so that you can chart the best course to succeed. I hope this brings some value to you. It's a great business, you guys. It really is. Make sure you're getting the training that you need, the support that you need, and relax this weekend. I hope this helps you understand your compensation. If you're dealing with guaranteed issue carriers, for example, Gerber, AIG, a bunch of other carriers I can flip out to you, anytime that it is a credit card carrier, 99% of every one of these companies will pay you as earned, which means as the money comes in, they pay you. Hope this brings value to you. Have a great week.